Robinhood is a disruptor company within the financial services industry. When they first came out, they were somewhat dismissed. The financial industry thought they were a little too gimmicky, would probably not work. But very quickly, they started to really change the financial services industry. For example, we owe it to Robinhood for zero cost trades. That was an innovation they came out with. And now all the other financial services companies that have brokerages have to follow or they lose market share. Investors really liked zero cost trades. And they're doing other things. For example, they're selling crypto as part of their financial services portfolio. It's a great idea. And now the other brokerages, guess what? They're selling crypto. So Robinhood is really leading the financial industry through their innovations. And the other brokerages that have been around for a long time cannot beat them. So they just join them. So in this video, I'm going to look at Robinhood as an investment. I'm a current stockholder in Robinhood and continue to buy shares. The stock went up close to 10% today. It was a great day for the stock. It was because a big analyst gave it a positive rating, actually increased its price target. Over the past year, the stock's up 157%. That is great. It's great to hold the stock. It's great to see it appreciate. And I think it has a lot more upside because the strategy and the potential of this company is much higher. I'll go through my fundamental analysis of Robinhood, share with you my qualitative assessment of the company as well as my quantitative assessment of the company, arriving at what I think a fair price for the stock is, see if it's discounted or being sold at a premium. I'll share with you what my plans are going to be with the stock. I currently own a good portion of their shares, and I'll let you know at the end of the video, at the end of my analysis, if I plan to buy, hold, or sell Robinhood stock. You're watching this video trying to get more information on Robinhood and probably trying to better your skill set as an investor. I welcome you to become a paid member of our community and to become more involved in our community. We share in experiences, knowledge, tips, and approach into investing, and you can be part of it. You can look at 3 levels of being engaged with our community, and you can get the details of signing up in the details of this video. Robinhood is a very desirable company for me. The reason for it is that they are different and they're selling into a space of investors and customers that is a younger audience, a younger demographic that has a different expectation on a user experience and the way to invest, the way to communicate to that audience, the way to educate that audience on investing. All those things align with how Robinhood operates. So I think they have a huge advantage because they're targeting a demographic that other brokerages are not really focused on. Other brokerages are focused on the older investor that has been around a long time, has a different expectation, and different way of engaging with that brokerage and different way of seeing their data. So overall, I think Robinhood in my quadrant of desirability is predominantly in the green because within the younger investor market, I believe that Robinhood stands alone. Now, they do have competition from other places and other sources, so it's not completely in the green. No one brokerage is completely in the green. So it does have some competition, so I put part of their business in the gray. But mostly, this is a very desirable business for me, and I am glad I'm a stockholder. The fundamentals of Robinhood are very strong. The company has a $22 billion market cap, and they have revenue of about $2.24 billion. They are profitable, and their PE is high this year, going down next year. A good reason why the PE is so high is the stock price has really worked over the past year. It's up 157%. Analysts really like the stock. It's a buy rating, but they are showing that it's being sold at a premium because that stock price has really increased. Robinhood is a growth stock. They have grown 34% in the trailing 12 months, which is very good growth. They had one negative growth year, and that's in 2022 when the markets really sold off. I think most financial services companies, brokerages were struggling that year. That's understandable. But before that, they were on very fast growth. They continue to grow their business. And their growth is organic. They introduce new products, and that new product drives growth. So those are very good characteristics of a company that's going to continue to grow, continue to innovate, continue to get bigger. Robinhood has a strong balance sheet. They have over $11 billion of cash and cash equivalents, and they only have $5.2 billion of debt. So they could easily pay off all debt and have debt completely off their balance sheet very quickly. Cash flow is a very important metric for me to understand and use to value Robinhood. And their cash flow has been quite difficult to understand. So I've put in a lot of time and energy over the past year and a half to really understand how their cash flow is going. In short, the business is growing. They're investing in areas to roll out new products. So that capital expense has really kept the cash flows down. But this is a new business. This is a young business. And the fact that they are producing free cash flows, especially in the most recent quarter, leads me to expect that this is going to be a consistent free cash paying business in the future. So I'm going to take the data that I've seen and make my own projection that I'll share with you in my valuation. The trailing 12 months show that free cash flow is negative 593 million. But if you look at the quarterly, you'll see that the most recent quarter is actually positive free cash flow. And what I'll do is I'll take a conservative projection, but that projection is for cash flows in the future to be positive. I've estimated the value that I think Robinhood stock is worth based on the free cash flows the company is going to produce in the future, as well as the earnings per share. And here's what I come up with. I believe that the stock is being priced at a premium of 9%. The price is 9% higher than where I think the value of the cash flows and the earnings per share is going to be. That's not a huge premium, and it's understandable. The stock has risen very fast, probably a little past its intrinsic value. Now, they have an earnings announcement on October 30th. I'm going to study that earnings carefully and see how I can update my model to get the most accurate valuation on the company. Now, looking at my investment in Robinhood, I've invested $19,120, and that investment has increased in value up to $38,860. So I'm sitting on an unrealized gain of 103%. So needless to say, it's been a good investment in Robinhood. Should I buy more shares, hold, or sell some of these shares and redeem some of this gain? My decision is to hold. Hold and wait for the earnings to come out on October 30th. Study those earnings. And I'm likely going to hold into 2025. It's a really good stock. Having a $39,000 investment, ride into 2025, I think is going to be the right plan for Robinhood. Of course, the earnings could really surprise to the upside or to the downside, and that could affect my overall plan. So that's my review of Robinhood. It's been an exciting 24 hours. It's great to see the stock really rally up because a big analyst gave it a favorable review and a favorable price target. I think the company is a great company. It's a disruptive, innovative company that's going to continue to drive new products that their customers really want to see. They really create products that customers get engaged with, that are excited about, that are impressed with. And that shows that the company has really good leadership, very good creative in an industry where, frankly, it's needed a lot of creative minds for a while. Thank you for watching. Good luck investing.